Hello everyone, and hope you're doing great. This is the weekly outlook video, a short video about the weekly outlook and what we are expecting from the week ahead, and how we're going to see them, how we see the market going to behave in the week ahead. First of all, I have to mention that in the week ahead we have the testimony of Mr. Powell, Jerome Powell. We'll have testimony on Tuesday and Wednesday, which is very important, and we have to follow that. The news and the topics and all the themes that is coming out from this testimony are going to tell us a little bit more about what we have to expect from the next Federal Reserve meeting. However, we have other central banks meetings also in the week ahead. We will talk about them generally with the data we have in the week ahead and with the testimony and other data we have in the week ahead. I can say that the real volatility of the March going to start from this week. So let's review the one by one. The first thing that we have to watch is going to be on Tuesday in Australia. In Australia on Tuesday, we're going to have the retail sales and central banks meeting. Retail sales is expected to increase by 1.9%, if I don't mistake, right? Yeah, with the 1.9%, and also that we're gonna have the trade balance. Trade balance and retail sales, both of them are expected to increase in January and February. These data are gonna be for January data. Yeah, the January retail sales is expected to increase by 1.9%, and trade balances should be about 13.2 trillion dollars, Australian dollar. So these data is kind of positive data, but on the other hand, we had the quarter four GDP last week, from the quarter four 2022 GDP last week from from Australia, as well as unemployment rate. Unemployment rate increased to 3.7% in January, which means so if we look at the data, that GDP was weaker than expected in the quarter four, and then we can see that the unemployment rate also increased. Both of them together means that we have a little bit mixed data from the Australian economy while retail sales increase. So we have some data positive side, some data in the negative side. Data from the Australian central banks is mixed, but at the same time, we know that Australian inflation is still high at 7.4%. Australian inflation at 7.4% is still so high. Therefore, we putting this data together, and don't forget about the Chinese economic condition, that Chinese reopening will help the Australian economy to increase. While we are expecting Australian economy, because the biggest business partner is China. So when the Chinese economy is improving, it means that the Australian economy also should improve. When the Chinese inflation is expected to increase in the following months, Australian inflation also supposed to increase. Therefore, we expect the Australian Central Bank to increase the rate, the banking rate, by at least 25 basis points this month. But the point is, if in the statement they mentioned that, okay, in the next meeting also we're gonna have another one more rate hike, then we can say that Australian dollar gonna be a little bit more powerful against its rivals. On the other hand, the Australian stock market, supposed to get more pressure. But if they increase just 25 basis points and don't mention about any increase in the next month, and also say that probably it's going to be the end of the rate hike cycle, then Australian dollar can be in a weaker position against its rivals. This is from Australia. The second topic that we have to watch is Bank of Canada. BOC meeting we will have the BOC meeting on Wednesday. Bank of Canada was one of the first major banks that started to decrease its supportive policies, accommodative policies after COVID. And then it was one of the first banks that started its hawkish policies. Therefore, it's also expected that the Bank of Canada can be one of the first, or even the first bank, to end its rate hike cycle. Why? Because inflation in recent months has been decreasing, despite increasing inflation in Europe, in January and February, increasing inflation in January in the United States. Despite all of them, Canadian inflation has been decreasing in recent months. At the same time, the economic data we have from the Canada is not that bad. Therefore, It's also likely to see the Bank of Canada to stop its rate hike policy and go to the hold and wait policy and see that, okay, what we did, and now we have to wait and see the result of what we already, the policies and the decisions we have so far. We have to wait and see the result of that. That's why we can say that it's also possible to see that the Bank of Canada to keep the steady policy and hold its rates at the current level and don't increase the rates. But at the same time, there is other point. We can see that inflation in the Eurozone is increasing. Inflation in the United States again is increasing. Therefore, there are also opportunity and possibility that the Bank of Canada increase another 25 basis points. But the chance of rate hike by 25 basis points is 40%, but the chance of holding policy is 60%. If the Bank of Canada increase the rates, then Canadian loonie can get a little bit more strong against its rivals. But if the Bank of Canada do not increase the rates and keep the holding policy, hold and wait policy, then we're going to see the more pressure on Canadian dollar. But Canadian stock markets can get a little bit more support. But still, it is not a guaranteed. However, what we expect is 40%, 25 basis point rate hike, and 60% holding policy. So that's what we have to expect. That's what I think about the Bank of Canada. But personally, I think they're gonna hold the policy. They wouldn't increase the rates in the next meeting. This is my personal idea. But the general and the consensus idea, but what the market's expecting is 40% rates hike, 60% holding policy. Me personally, I'm expecting to hold the bank. I do expect that the Bank of Canada to go through the steady policy and hold the rates at the current level. Then on Wednesday we have the GLTs, United States, US GLTs from the United States. We know the GLTs before, pre-pandemic, the GLTs was about, usually it was about 7 million. The middle around it was always about the 7 million, the GLTs. After at the 2022, this 7 million increased almost above 12 millions. Now it's down to 11 millions. And now for this week, we expect the GLTs for January to be seen at 10.6 millions. Even in February. Don't forget, in January, it was, in January. In December, don't forget that it increased again above 11 millions. So, what does it mean? 7 millions pre-pandemic. After pandemic down 12 to more than 12 millions. Now about 10 millions, 500, between 10.5 and 11.2 millions. It means the job market is still strong despite a little bit decrease, despite a little bit slowdown in the GLTs in the recent months. Still 10.6 millions. It's almost 1.5%. 1.5%, not 1.5, 150%, something like that, above the pre-pandemic level, which means the job market is still strong despite recent kind of decrease in the GLTs, but still the job market is very strong and very good. If we see the GLTs again about the market is expecting 10.6 million for January. If we see the same numbers or the numbers around that, we can say that it's gonna be supported for the US dollar. So the US dollar will get the support with this data. And then on Friday, we have two other topics. We have two other important events to watch. First, it's going to be the BOJ's interest rate decision. Bank of Japan, we're going to have the interest rate decision and monetary policy meeting on Friday. It's going to be the last meeting that Mr. Kuroda is going to lead the meeting as the governor of the Bank of Japan. But from the next meeting and from April, Mr. Ueda going to take the place, and he will be replaced as the governor of the Bank of Japan. What we expect that Mr. Ueda also is a hawkish person, is the dovish person. He's an economist that always support from the accommodative policies, means that he always believes that the economy is kind of the weak right now in Japan, and we need to a little bit more help and more support from the economy to see the Japanese economy in a little bit better condition. Therefore, what we expect we can say that the Bank of Japan still, if even if Mr. Ueda take the place, we would not see any changes in the short term. But since the spread between the Japanese central bank's policy rates and other central banks' policy, since this spread is going to be it's going to increase on one side, and on the other hand, Bank of Japan was holding all these dovish policies to help the economy, to get the economy to some levels. What we expect is that the Japanese economy to get what they are expecting in the last quarter of this year. And the spread between the Bank of Japan and other central banks, the spread of the policy rates, gonna be so high. Therefore, even if the Bank of Japan holds its current ultra accommodative policies, ultra dovish policies, in the last quarter of this year, they're going to start rate hike, and we can see that the Japanese yen to start getting stronger in the last quarter of the 2023. So this is what we expect. So not change for now, but we expect a little bit. The U-turn in the last quarter of this year, and finally, non-farm payrolls. On Friday, we're going to have the U.S. non-farm payrolls. This non-farm payrolls on February and January was amazing. More than 500,000 newly created job, and unemployment rate at 3.4%, which is the lowest level in the last 53 years. All of them, they were surprising. They were amazing. All of them, they told us that job market in the United States is surprisingly amazing, and what we have to expect is for what we are expecting for February and to see in this week's status we are expecting 200,000 new jobs to be created, new jobs once. And a second, what do you expect? We expecting the unemployment rate to stay steady and no change at 3.4%. But don't forget, average earning hours expected to stay at 0.3% on the monthly scale, but on the annual scale it's expected to increase to 4.7%. Participant rate expected to stay above 63%. At the same time, when we see that newly created job increasing, participant rates is still high, it's fine on the acceptable levels, but average earning hours is increasing, which means that inflation still there, and we have too many things to deal with that. Still, we will have a longer time to deal with the high inflation, which means this data will support the hawkish policies from the Federal Reserve, and it means that the US dollar, should get stronger after this data, after expected data, and stock markets will get more pressure with this data. But if we miss the expectations, if the job market gets a little bit weaker than expected, then we can see the pressure on the US dollar, but lifting in the stock markets. This is overall what we are expecting from the week ahead, and what we expect to see. If you had any question, please write under the video, in the YouTube and Instagram. I will get back to you and answer the question. Okay, guys, have a good weekend. Have a good days in the weekend, and have a good weekend. And then I wish you to have a profitable week in the weekend. See you guys again next week, and bye bye.